Well, good morning, everyone. Good morning. It is Monday morning, August 17th, 2026. So good to see you all this beautiful Monday morning here in Austin. It's going to be a warm week. Look at the forecast. We're going to have some 105 days towards the end of the week. And then hopefully it'll go back down under 100. It is so good to see you all this beautiful Monday morning, you all. Lots going on here in beautiful Austin, Texas. You can see behind me that we have not had the best 2 days within the bond market. Unexpected increase on the 10-year yield this morning. Is shot up. No really good reason why it shot up by so much this morning, but you can see behind me that it did. Thankfully, we did see a little bit of a pullback from this morning. Just for the first 30 minutes, it shot up. Nice pullback from that 30-minute cycle this morning, but we're still exactly the same rate environment that we were Friday. We are very close to a repricing line. Hopefully, we will continue to see this improvement that we saw. A few numbers that came out this morning. The National Association of Home Builders this morning issued their NAHB Housing Market Index, National Association of Home Builders. Let me go ahead and show you this information really quick. Let me go to the calendar, economic calendar, investing.com, economic calendar. Let me put this on the screen. This index has three numbers. One of them is the only number that I care about. Let's go ahead and get that information. I want to download that information. I'm going to go to NAHB as the source. Wait until this comes up. Let's get this going. There we have it. I'm going to download the Excel spreadsheet, show you the number that I care about. The good news is that the overall index actually tracked up a little bit from July. So it did go up. What I want to see is, well, where did that information come from? What I always do is click on table number 3, and that's going to be the component history. That's going to show us the 3 components that I care about. Only one of them is one that I really care about, and that's going to be the prospective buyers, traffic from prospective buyers going into sales offices. And that's going to be this number right here. And that's good. Last year, it was 22. Let me make this a little bit bigger. This year, 23. It did match the 23 that we had last month. So it's not great. 23, better than last year at a 22, but not great. Not great at all, actually. And this shows me that we're going to continue to see builder incentives. It's at 23 right now. To put in perspective, if I go all the way back to 1985, the average is 39. So we're still 50% lower than the average going all the way back to 1985. If I look at the August average, it's 38. And we're at 23 right now. So it's a third less than the August average going back 40 years. So we're still very much in a low demand for new construction. This index is across the nation, but it does track very well with the Austin market, which is why we're seeing builders offering so many incentives. My email to you this morning was a little bit on the slightly panicking mode. I don't want to use the word panicking. Eye-opening. I'd rather use that word. Very much in the eye-opening mode. There are a few things that we have to understand with what's happening with the Austin market going into the third quarter. I'm certainly noticing on listings that we track here at Team Price. I'm having these conversations not only with you all, but also agents across Austin, brokers across Austin. I'm personally experiencing it. And we need to be aware of it. We need to talk about it because it's going to position us well when working with buyers and sellers. What would you rather do? Go over the Austin Daily Briefing or hit up the new listen to pending ratio first? I'm going to leave that decision up to the first person that responds. Do you want to do the new listing to pending ratio or the daily briefing? Let's get someone to respond. New depending. Melanie's the first one. Let's go ahead and start with the new listing to pending ratio, the single best leading market indicator available for the entire area. This is where we take a look at all the new listings that have entered the market over the past 7 days. We add all the back on the market. So any new inventory that's entering the market, and we simply divide it by anything that was absorbed by the market, active under contract plus pending. Let's go ahead and go backwards in time a little bit and update the previous few weeks. We know that agents are really bad when it comes to updating active under contract and pending. So we always have to go backwards in time a little bit. This is going to update to 488 on the active under contract. On the pending side of things, this is going to be 352. Let's update 3 weeks ago. This is going to be 505. That stays the same. 20th through the 27th, 459. That stays the same. 506 stays the same. 453. Ooh, that all stays the same. How often does it all stay the same? It's not that often that it all stays the same. Usually we get a little bit of a bump up, but in this case, we are not. Let's go ahead and start updating the 10th through the 17th. Keep in mind that 11:59 p.m. tonight, new listings, price increases, price drops, all lock. So when you review this information tomorrow morning, those will be locked fields. Active under contract and pending will continue to update for the next few weeks. Let us start with new listings. How many new listings? Last week we were at 1101. Just one additional listing versus 2 weeks ago at 1100. And so far today, over the past 6 days and 10 hours and 13 minutes, we're at 1,009. 1,009 new listings have entered the market from August 10th all the way through right now. And we still have 13 hours and 46 minutes left in the day where more listings will be added to the market. Price increase, we're looking at 166. Whoa, low number. Low number. Lowest number going all the way back to December 29th. It's a low number, 166. That just fell apart. What about price decrease? 1865. There's that 92%, meaning out of anything that could have gone up or down in value, what percentage went down in value? We're looking at 92%. That's going to be the highest number going all the way back to April 27th. What about back in the market? I can expect back on the market percentage to go down. I'm not even clicking on the number quite yet, and I'm going to say, just for a guess, I'm going to say 16% back on the market. Sellers are more eager to negotiate when the market starts slowing down. They don't want the property back on the market. Let's see if we're accurate. That comes in at, oh, y'all, 16%. That's exactly it, 16%. That's going to be the lowest number going back to May. There's that 16% right there. When the market starts slowing down, sellers are more eager to negotiate post it going under contract. The hotter the market, the higher back on the market. It's counterintuitive. There are some isolated incidents where back on the market pops up. And those are situations where interest rates, if all of a sudden go up by 50 basis points, if tomorrow rates go from 6.875 to 7.125, 7.25, it would be catastrophic. Back on the market would shoot up, but it would be isolated to that one event. Well, we're not experiencing that right now. Rates are stable. Back on the market is going down, showing us that sellers are more eager to negotiate with that buyer, that second phase of negotiation. Not due to appraisal, because properties right now are appraising. They are appraising right now because appraisers are using the sold data going back 6 months. We had a very good first and second quarter, so they're capturing all of that sold data. The leading indicator is softening. The lagging indicator is very positive. So I'm not concerned about properties not appraising right now. When are we going to be concerned with properties not appraising? February, March, April. Why is that? Because now they're using the lagging indicator. We know we're heading into a softer third quarter that could very well extend into what historically is the softest time in Austin real estate, January. That's going to give us the lowest sold price historically. It's going to be the month of January, capturing the activity that happened October, November into December. Then things start picking back up again, and now we're using the slowest time in real estate as comps for a hotter time in real estate. The appraisal cycle follows the same thing. Properties tend to appraise really well between September and December. We start neutral between January and February, and we start experiencing appraisal challenges into February, March, April, and May. So I'm not concerned about appraisals right now. Let's take a look at active under contract. We're at 350. And before I click on the pending, you know the drill. We need 5 guesses. We need 5 brave souls to guess how many pendings. We need 5 brave souls to guess how many pendings. Okay, we've got a few guesses here. We have 203, 192. 203, we got 189, 203, 192, 187, 175. Wow, we got a lot of guesses. 169, 180. All right, good stuff. Let's go ahead and figure out what we're looking at here. We are looking at, drum roll, please. Ooh, Melanie Price. Looks like Melanie Price is going to win. We're looking at 179. 179. Oh, wait, did Daniel choose 179? What did Daniel choose? 180. Oh, you're right. No, you went over. The price is not right. You went over. You don't win if you go over. Those are the rules. We use the Price is Right rules. You lost. Shamefully. 179, you all. This confirms everything that we have been saying. To put in perspective, last week, the ratio, we're at 0.45 right now. That's where we are. Last week, exactly the same, 0.45 ratio. That's where we were last week at a 0.45. It got up to a 0.63. So we're entering this with a 0.45. Kevin said, bad rules, should be closest no matter what. Now, we have to be consistent. We have to follow the Price is Right. We have to do that. It's funny. So we're at 0.45. Well, what does this mean? This means that we're going to end under 0.7. That's what that's going to mean. So we are now running at the 4th week in a row where the ratio is underperforming last year. But we know what happened last year. We had a fairly good third quarter going into the 4th quarter last year, which was opposite of the first and second quarter last year. This year, 2026, we see an inversion. Now we've got a slower third quarter this year compared to last year. It was just a complete market switch that happened right at the beginning of the quarter. We started feeling the warning signs back in June, even June 1st. It's like, okay, what's going on here? We had a little bit of a break, but not by much. These are not exceptional numbers. We went back into the negative. The red dot means that the ratio underperformed last year. We did have this little bit of a break, but that's a fake break. You see this green dot? That's a fake green dot. Why is that a fake green dot? July 13th through July 20th, because we only had 1,065 listings that hit the market. And the reason why it was the floods we had a ton of water that specific week, and it slowed down new listings entering the market. Let's go ahead and compare the same week compared to last year. We are down by only 7 listings, and we still have, 13 hours and 48 minutes, or not 48, is it 48? No, 38. We still have 13 hours and 38 minutes left in the day. Are we going to get 7 additional new listings between now and 11:59 p.m. tonight? Of course we are. We're going to get about 50 to 60 new listings entering the market. So we're going to be plus. All day long, we're going to be plus. We're down by only 4 July 27th compared to the same week last year, but we're up by 63. We are down by 57, so the ratio is very close. That ratio is off by only 0.8%. But we've been off on the ratio. So far, if we exclude this week, on average, the ratio is off by 5%. So we can say with a high degree of confidence that the third quarter has slowed down by roughly 5%, as opposed to the first 2 quarters of the year, 7.8%. This translates into activity. First 2 quarters were up 7.8% in activity. And then starting this quarter, if I were to add this week, 7%. There's that inversal. Third quarter, we noticed the momentum slowing down towards the end of the second quarter. That slowdown is now picking up steam. That's what's happening right now. Something that we really have to be aware of when working with clients, both on the listing side and the buying side. Of course, on the listing side, what does that mean? A decrease in activity. You've got to hold on to that property that you've got under contract. Got to communicate this with a seller. The seller could very well have a second quarter mindset of a bullish market, a recovery market. Right now, we're in a slower market. This is not the same market that we were 2 months ago. We've got to be aware of that. The data never, ever lies. Let's take a look at what is happening so far. Let me go ahead and start updating the new listings month to date. First thing I'm going to do is go backwards in time a little bit, go to the month of July and see if we have to update any of the pendings. This is going to be 1823, that stays the same. For active under contract, 2080, that stays the same. We can start updating August. This is going to be your month to date. How many new listings so far? We've got 2,093 new listings. Price increase, we're at 451. Price decrease so far, we're at 38.28, 89%. Of course, higher than July. We knew that. Back on the market. Let's take a look at back on the market. We're at 377. 18% back on the market. That number is going to go down. We did notice a little bit of an increase back on the market first part of the month, but that number is going to go down towards the 16 or so. You see July, we started seeing a pullback on the back on the market down to 15%. Let's go to active under contract. We're at 871 active under contract. And then pending, we're at, wow. Here's a thing that you have to keep in mind. When we update the weekly new listing to pending ratio, I overlap the Mondays. I just do that. but just been doing that historically. I overlap the Mondays, and then we get the year to date. So when I overlap the Mondays, and the reason I overlap the Mondays, I've done it both ways. It actually gives you a more accurate ratio than if we do not overlap the Mondays. So I go August 3rd through August 10th, and then August 10th through August 17th. So I overlap the Mondays just to capture that entire weekend activity, and we can express that as a ratio. It's going to give us a better ratio because so much real estate activity happens over the weekend into Monday. We don't do that on the month to date. That is the first up until right now. And then when you look at July, it's the first to the end of July. How many pendings do you think we've had so far in the first 17 days? This is for the 6-county area: Travis, Williamson, Caldwell, Bastrop, Burnett, and Hayes. How many pendings have we had so far in the first 17 days? Melanie is going to start us off at 648. Let's get 2 more guesses going. 600. One more guess. I mean, this is a population of 2 million people. 2 million people. How many total pendings in the first 17 days? We've got 648, we've got 600, we've got 595. $566. 566. So we've had 1,437 properties go under contract, active under contract plus pending in the first 17 days of August. We're looking at, so far this month, a 0.58 ratio. That's what we're looking at so far this month. Last year, we had a 0.80 ratio. That's what we ended the month of August. We know that this ratio is going to go up because we know that September 10th, people are still going to be posting August properties under contract. We know that. But this confirms everything that we've been feeling, everything that we've been saying. We're looking at 559 withdrawals in so far this month, 214 expired. But when you look at the year over year, new, we're down 45%. That's going to be month to date compared to the entire month last year. New, we're down 45%. Right in line. As a matter of fact, we are, how many days this month? Yeah, we're roughly 40, we've got 45 days left, 45% of days left. So that's right in line. We're going to end the month a little bit higher on new listings. On the pending side, we're down by 60%. No, that's the sold. On the pending, we're down by 61% on the pending. We're not going to make up that gap. Last month, we ended 3.4% down on pendings. We broke our 6-month streak where we were outperforming on pendings. We had 6 months in a row from January. There's that 2 quarters, right? 2 quarters, 6 months. And then come July, a 3% drop on pendings. We are going to end August easily at about a 5% drop on pendings. 5 to 7% drop on pendings is going to be my prediction. We're still up on solds. July solds were fantastic. And you can see that April pendings were up 11.4%. And then June and July solds up 11, up 10. We are capturing some of the solds in May, June, July from new construction properties that went under contract at the end of last year. So we've had a really good streak, and that's what the headlines are capturing. And that's why we have to be cautious, and that's why we have to be obsessed with leading indicators, because the historical headlines are fantastic. A 15% increase in sold activity year over year. That's great. 5, 11, 10. When you look at the first 7 months, The average is 7.5% increase. These are all great. They're fantastic increases in activity. But that captures the historical. That's the lagging indicator. What do we have to do? We have to be obsessed with the leading indicator, and that's going to be this slowdown in the new listing to pending ratio, specifically this slowdown right here that we're noticing on a week over week. Starting back in June, we've got this little one-off week. The reason why it was because of the rain, but we are now averaging 0.74 if we don't include this week. Whereas if we were to capture the same 10 period before, we're 0.81. So from 0.81 to 0.74, that might not seem like a big decrease. That's a 20% drop. Let me go ahead and save this. When I send you the recap, I'm going to include this entire PDF so that you can review this in great detail. We've got over 60 pages of this information with all of the charts, everything that you need just to have that conversation with your client. It doesn't look like this. This is just what it looks like on the screen. When we save this as a PDF, it looks beautiful, looks perfect. And this is really good information for you to review with your clients, whether you're working with a buyer or a seller. For a seller, headwind, less showings, less activity. For a buyer, more opportunities, more concessions. Melanie said, I need to send seller updates today. There you go. You've got to review this information. I'm sure you will. So what is happening with inventory? What's happening with pending? You can see on my screen, active listings year over year. We have 0.5% more active listings today than we had the same exact day last year. On pendings, we are down 4.35% on pendings. You might say, well, wait a second. I saw your email earlier today where it showed us that we are actually overperforming on the number of active listings and the pendings. If you looked at my email from earlier today, it might say something else. Well, that's the difference between year to date as opposed to same date compared to last year. Those are two different metrics. Year to date, we are down 2.4% on the number of new listings, down by 998. On all new listings that have entered the market from January 1st to August 16th, I do this snapshot every single morning. On the pending side, we're up by 3.1%. But if you were to review this information historically, and you can always review this information by going to our X account, because I just post a snapshot every day. I just do a snapshot of this information. And let's just take a look at July 1st. Maybe later. July 1st, new listings, we were down by 3.2%. Pending, we were up by 4.5%. We're now 2.1, 3.1. Do you see the number switching? We're catching up on the year to date. That's what's happening. If you want to look at the historical, just go to our X account and you can just scroll down and just see all of the historical. Let me just take a look. Here's another one, 3.4, 4.1, whereas right now, 2.4, 3.1. This is going to be the year to date. What this shows us is the actual date, this Monday in the same week last year, because I don't compare August 17th, 2026 to August 17th, 2025, because I don't want to get stuck comparing a Monday to a Sunday. I want to use the same exact week compared to last year. This is a little bit of an update to this chart. I've added the 2024 active peak 25 and 26. We can see that 2024, July 15th, the active listings peaked at 15,503. And then in 2025, it peaked June 30th, a little bit sooner, closer, shorter at 18,146. This year, we peaked July 13th at 17,809. So we did not pass last year. But here's one thing to keep in mind. This started going down way more than it's going down. You see that little bump? We're actually going up a little bit, whereas historically we've gone down by this time. So far, 55.8% of all active listings have had a price drop. We are up 0.5% on active listings. Today, we have 17,616. This same day last year, 17,528. Cumulative new listings, we are down 5.9%. Do we have that other chart for pendings where they peaked each year? We do have that in the active residential inventory that is available. I do not think that I have the actual date. I just have the number on it. If you go to Insight and Statistics, active residential inventory, you take a look at the PDF, and here we have the pendings. I've got the pendings. I'm happy to add a date to that if you want the date. I just have the number, but if you want the date, send me an email and I will put that on the queue of form improvements. While the top is active, the bottom is pending. So you've got active and you've got pending. So the bottom is pending, the top is active. But I'm happy to add the dates on both of these charts on when it actually peaked. So if you need that, send me an email because I won't remember it after this meeting. Send me an email and I'm happy to do that. Now let's take a look at the pendings. Pendings, 4.4% drop on pendings. We are now underperforming both 2025 and 2024 on the number of pending properties today compared to the same date last year and 2 years ago. When you look at all of the cumulative pendings, that trend is going down on cumulative pendings. Now, keep in mind that we are 17 days into August, so we still have 13 days left for pendings to be posted for 2026, whereas 2025, that includes all of August. I do expect the cumulative number to exceed 2005 and to exceed 2004, but it's not going to exceed 2003 because we're waiting for pendings to be posted this year. But what we do have that's super accurate is the activity index. And this was the email that I sent you all this morning begging you to be a part of the meeting today. If there is one formula that as real estate agents and brokers we have to memorize is the activity index. Pending divided by active plus pending. That's going to show you out of anything that could be under contract, what is under contract. And you have to be obsessed with this. You have to use this every time you're submitting an offer, every time you're working with a client. You have to be obsessed with the activity index. One of the neat things about the MLS is that it gives you the ability to calculate the activity index for whatever area you are working with a client. Just go to map. If you've got a client looking, just let me grab anything. Let's just say you've got a client looking in this pocket right here. This is what you do. You just draw a radius. Draw a 1 mile radius around the area that your client's interested in. There's that 1 mile radius. You go to criteria, and what's the activity index? Pending. That's going to be active under contract plus pending. That's 11. And let's go ahead and get the calculator ready so that we can just divide 11 by what? Look, all you have to do is click on active. 11 divided by 60. 11 divided by 60 is going to give you an activity index of 18.3%. Is that good or bad? It's not good. That's not good. That's very much a crisis. We're under the 20% danger. And the other neat thing that you can do is you can scroll down right here under property condition and say, okay, I just want to look at the resale. I'm not going to click on anything else and simply look at the resale. So now we've got 8 divided by 50. Well, let's take a look at 8 divided by 50. We're at 16%. The entire market, 18.3%, the resale market, 16%. And then you can say, okay, give me anything that's not resale, a new construction, whatever else. So now we've got, what is it? Not resale, 3 divided by 10. So that's 30%. So the new construction, 30% activity index, the resale, 16% activity index, the cumulative, 18.3% activity index. So if you're looking for new construction, that little pocket, super solid. You're not going to have a lot of negotiating room. 30% activity index is not bad at all. On the resale side of things, you're looking at a 16% activity index, and we were able to pull this information just by looking at the map. I'm going to do one more just so that you can just see how easy and powerful this is. Let's grab, and you don't have to do a radius. You can do a polygon. Let's just say that you've got a client looking in this area. Let me delete that shape and just do like a polygon. And I'm going to go right here. I'm just going to capture this area. And what do we have here? We have 24 divided by 158. 24 divided by 24 divided by 158. 15% activity index. Not good. Not good. Slow. This is why this is so powerful. As you are showing properties to your clients and your clients say, what about this property? What about that property? This is going to give you that information that will really, really help you. Just wanted to show you that so that you can be equipped when helping clients. Now, this chart was very eye-opening for me, because not only did we see this really steep drop in the activity index, pending divided by active plus pending, first 2 weeks of August, we are now very close to the lowest activity index for all of last year. And this is for the entire market. We're at 18.8 right now. This same day last year, we were at 19.5. The lowest last year was 18.6. We're at 18.8 today. Now, we are going to notice an improvement in the activity index between now and Thursday, Friday. Very few listings or less listings enter the market between now and Friday, and then we get that bump in new listings that come on the market. So the lowest activity index does tend to happen over the weekend. It's going to be a combination of Friday and Monday is going to give you the lowest activity index. We can look at all of these lows and then it bounces, low bounces, low bounces, low bounces. That's going to be just your weekly cycle of when people bring homes to market. Thursday and Friday are the top 2 days where people add listings to the market. We've got a question. Kevin, please go for it. We've got a question. I cannot hear your question for some reason. I cannot hear your question. Oh, wait, go. No, I can't hear your. Sorry, you couldn't hear me. I tried typing. For some reason, I cannot hear the question, unfortunately. But go ahead and try typing it, and I will be sure to answer. I don't know why I can't hear your question. Why is that not a difference of 0.7? Well, because I'm not subtracting it, right? So I'm using it as a percentage difference. So what is the percentage difference between last year's activity index versus this year's activity index versus a subtraction? So that's what I'm doing. I'm doing a percentage difference as opposed to a raw subtraction. So that's why. Okay, good stuff. Good question. Excellent question. So what's happening with cities and what is happening with zip codes? This is going to be the resale market. 5939 doing very well. We don't have a single city over 30% activity index. We do have 2 zip codes. Between 25 and 30%, more of that balanced market. We're looking at 3 zip codes in balanced market condition. Softening, we're looking at 16 zip codes that are softening right now from 22503146. That's going to be the ones that are not green or red. That's going to be your softening market. And then anything between 15 and 20% is going to be a stalling market. That's where we're going to start noticing price declines, supply imbalance, higher ratio of active to pending, and then under 15%, 15 to 20% is going to be your danger zone. Under 20% danger zone, all the way to 15%. Under 15%, that's a crisis. That is a buyer paralysis, and price corrections will accelerate. We will see more and more of these areas entering into the price drops. You can go into the active residential listings and look at the price drops per zip codes. That's going to be page number 24 under active residential inventory. And take a look at 78717, 63.6% of all the active listings in that zip code have had a price drop. You go here and you look at 78717, and where are we? 78717. Let me find 78717, not on this list. Is it on this list? Not on this list. Come on, where's 78717? Right here, 7717. 10.61% activity index on the resale. The reason I bring up 7717, that's Avery Ranch area. That's the North Austin bordering Cedar Park, where historically it's been really, really good. When you go back to Insight in Statistics and you go to activity index zip code, let's take a look at the 78717 historically over the past 12 months. 78717, here's 17. Right there, 78717. Fantastic March. That market has slowed down by 71% from March. 71%. From 37% to 10.6%. Now imagine you got called in a listing presentation in May, June. You're looking at comps from, and keep in mind, 37% activity index in May means that those properties closed when? June, July. So really good demand in May, both February and March, good demand. That demand is going to be expressed when? April, May, June. You get called on a listing presentation in June. You're looking at solds that happened April and May from the activity that happened February and March. So you're telling your client, things are looking good. Things are great. Hey, I recommend this price. They're spending a month doing make-ready, landscaping, painting, and then you wake up and you're like, whoa, what just happened? I just had a listing presentation 2 months ago. Y'all, that's why you have to be obsessed with that specific market on a weekly basis, even daily basis. Look at this information. Be obsessed with this information. Any listing that you've got coming on the market, go to Market Update, scroll down, go to Data and Analysis, grab that specific zip code, and review this information that's updated. I mean, there's a reason we update this information on a daily basis. Monday through Friday, this document gets updated, and you can see the activity index plummeting. That's leading indicator, lagging indicator, months of inventory starts going up. And then you take a look at the activity index. Oh my goodness. Start drinking. You look at the activity index per price point, and the $700,000 to $800,000 price point, you've got 10 active homes, not a single's pending. Not one is pending. The market just stalls at the over $600,000 price point. There is only one property pending over $600,000. There's only 6 pending over $600,000. Over $700,000, there's only 1 pending. Once again, imagine you did that listing presentation. Everything looked really good, really positive. Back when you were negotiating this listing, reviewing comps with your client back in April, May, And then the property's ready to go to market, and you've got a 71.3% drop in activity from peak, a 41% drop in activity from a year ago, which was 18.2%, and that's nothing to brag about. Very important to be obsessed with this data, obsessed with this information. Across the board, we are noticing a drop from peak. We expect that. What I am most interested in is the drop year over year. Some of them, great. Even though the 50 zip code, we've had a 40% drop from peak, we've got a 46.8% increase from August of last year. But you know what August of last year is in real estate? Might as well be 10 years ago. Means nothing. I'm interested in the trajectory. I'm interested in the movement of the market. What's happened over the past 30, 60, 90 days? That's what I'm interested in. Let me take a look at a few things here. Yeah, this is what I'm dealing with in Georgetown. I'm dealing with a 27% drop from peak, 37, 25. Year over year, 787, 78628, 13% drop. So be obsessed with these figures. For the buyers, way to go, buyers. You've got a ton of leverage. I mean, look at Round Rock. Crazy, 12.4% activity index in Round Rock. Sometimes I pull this figure and I'm like, did I calculate this wrong? No, this is accurate. This is exactly what we're noticing. At each subcategory, we're noticing a pretty significant. These numbers do not lie. They never lie. Which price point is performing the best activity index wise? 2 to 300. 23.1% activity index, 2 to 300. Second best is going to be the million to 1.1 million. That's got a really good activity index, excellent absorption ratio, really good absorption ratio. Lowest inventory is going to be the million to 1.1 million. But it's also the category with the highest percentage of active listings with price cuts, which is really interesting. They're moving that inventory. Lowest days on the market, you're looking at 3 to 400,000 at 66 median days on the market. It's going to be the lowest ones. And what percentage of all inventory is fresh on the market? 22.5%. That's a high number for this time this year. Out of 17,616 active listings, 3,972 did not exist 30 days ago, 22.5%. That's a high number. Del Valley, watch out, Del Valley, watch out. Del Valley had a pretty decent run. Let me go to Del Valley and see what's going on. Del Valley had a decent run. We did experience this little pop in Del Valley. That pop is about to pop the other way. Let me go ahead and just take a look at Del Valley really quick. Data and analysis. We're going to click on Del Valley and let's see. Yeah, Del Valley had a nice little pop. Months of inventory went down by quite a bit. And then there's that leading lagging. The yellow line is going to be months of inventory lagging indicator. The bar chart is going to be the leading indicator. And let's see what's going on with Del Valley. No market after 500,000. Barely any activity. Really, the only activity that's noteworthy is going to be the 1 to 200,000. Not much there. One active listing, 2 pending. I won't even count that as any inventory. We've got decent inventory between 3 to 4. That's going to be your builder. You cross the 400,000. That's the kiss of death. Nothing's happening at the 400,000. And let's take a look at Del Valley using the 12-month. And there we have it. We had the best activity index was March, and we're down 16.5% on that. Someone mentioned Gerald. Sonia mentioned Gerald. Gerald's holding steady on the activity index. That's holding steady. New construction. The activity index on new construction is interesting, and that's why we do have to rely on this activity index for resale at 10.83%. On the new construction side, when you add new construction, you're closer to that 25% mark. In Gerald, 23.7%, which tells me a vast majority of the properties in Gerald, that's what's moving. It's going to be the new construction. The resale route, really tough, really tough. And that's going to show us right here, 10.83% on the resale side of things. Months of inventory, lagging indicator. Do not trust months of inventory between now and mid-October going into November because it's capturing the decent, really good activity that we experienced over the past 3 months preceding August. So this is going to be a lagging indicator, and we are noticing months of inventory going up because the number of active listings this year now exceed last year. But still, 14 cities are up in inventory compared to this same month last year. 16 are down. And let's take a look at our projected sold. We are projecting a fairly flat year over year sold, right around 2,700, which means that we are going to end this month with an increase. Cumulative sold properties January through August, we are up 7%. This is going to mark the best year since 2022 on the sold because we had such a good first 2 quarters of the year. When we divide the number of sold properties by 1,000 realtors, we can see that this is same thing. Best year we've had since 2021 at 1,247 sold per 1,000 realtors. Next question for you is, do you think prices are up or down so far this month? Up or down? We're 17 days into the month. Do you think that the average sold price and the median sold price is up or down so far this month? What do y'all think? Let's get a guess going here. Down. Melanie says down. Let's take a look at it. Okay, Sonia says down. You're absolutely right. Both the median and the average sold price is down, not only month over month, but we are now down year over year. We're at 571 on the average sold price, 420 on the median sold price. When you take a look at the active properties, let's take a look at active really quick. We're going to go back to Insight in Statistics. We're going to go to pricing data and look at residential price. This is going to give us the active price. The average active list price, 623, up by 2.6%. This is for the entire MLS. The median sold price, median list price, sorry, not sold price, median list price, down 3.4%. Which means listing agents and sellers are reacting to the market. They're being proactive into the market. The median list price peaked May 2022. It's down 23.1%, down 3.4% year over year. The average sold price down 1.1%. This is across the entire MLS. So you can go to residential price and you can look at all of the information on residential price, including active for the entire MLS, along with the city of Austin. We are down 16.19% year or from the market peak on the average sold price. On the median sold price, down $130,000, down 23.64% on the median sold price. So there are some deals out there, you all, which is why I sent you all the top 100 opportunities for the Austin market. Take a look at your email. I sent this August 16th. Sonia, I apologize in advance for not sending it on the 15th, but I made sure to send it on the 16th yesterday. Saturday came and went. I'm like, oh, wait a second. I didn't do it on the 15th. So I had to excuse myself in the time with Gail and go ahead and crank this out for you, Sonia. This is the top 100 opportunities that we curate on a monthly basis. This is an excellent outbound marketing material that you can send just to keep your clients engaged in what's happening with the market. Amazing list that you can send investors. Everyone has that little URL shortener that you can copy and paste. Take a look at your email. If you have not posted this, I want to beg you, just to use this material that we're creating for social media, send it to clients, text it. And you can see the property that we highlighted, or highlight if you want to be grammatically correct. You can see property number 16, Jamie Drive in Manor. This property, you can see by our X post, sold for over $360,000 in 2023. Sold for over $360,000 in 2023. It then went into foreclosure. They're asking $245. It was listed for $270. When they click on that link, it just takes you to that property. Oh, no property. Did it go under contract already? It might have gone under contract already. Let me go ahead and click on this one again. Let's see here. Yeah, it looks like it might have gone under contract already. Let me see. If not, then that means that I've got to contact our web vendor. It looks like I probably have to contact our web vendor on this one because it does show that it's active on the market. So let me go ahead and put this screen here. And as a matter of fact, let me just get the address because I want to show you what can happen in such a short period of time. Let's click on Zillow. This is what the property, is this what it sold for? At one point, these were the pictures. Oh, y'all, are we selling the house or are we selling furniture? You got to be kidding me. What in the world is that? What does that bottle say? Jesus in Germs? Is that a brand? Jesus in Germs? That is weird. All right. Awful. Right? Ridiculous. Just ridiculous. Like, are you serious? This is absurd. Are you selling the chair? Are you posting the chair on Craigslist? Is that the goal? What is this? Y'all, I get angry. I just get angry at stuff like this. Angry. Like, let's get an overview to show how much storage space is available over the fridge. Let's just do that. I just get angry when I see stuff like this. You got the IKEA lamp, which I hate. I hate that lamp. It looks so just weird. So this property was on the market. And let's see what the pictures look like right now. These aren't even the pictures from right now. This is like the old listings. So let me show you what the pictures look like right now. It looks better than the previous agents. I'll say that much. So they added some brass handles to the property. I have no idea what that thing is right there. No clue. Nothing sells a property more effectively in 2026 than adding wallpaper from 1993. That's the key. You want to sell a property in 2026? Let's add some wallpaper from 1990. Okay, you've got your wallpaper bathroom. You've got your, half bath. Let's replace the toilet seat with a wooden toilet seat because that's what people are looking for. That's the laundry room. Let's add a chandelier to the laundry room because that's what people like. Bottom line, this property went into foreclosure. It was a really nice looking home in 2023 when it sold for over $370,000. Now it's in foreclosure, VA foreclosure, currently on the market for $245,000. So take advantage of this top 100 opportunity list that we curate on a monthly basis. We send it to you. The link is custom to you. So any client that clicks on that, it'll take you to your personal subdomain so that you can capture that lead and you can work with that specific person. So please take advantage of that. But the market is down $130,000 from the market peak. If today is the bottom of the market has to appreciate by 31% in order to reach back to a peak value. So far this year, both the average sold price for all 20,493 properties that have closed so far this year, the average sold price is down by just a little bit, only $285. The median sold price is down by 1.9%, $8,302. Is this still a bifurcated market? Barely. And I hate to be the one that says I told you so, but I told you so. I said, hey, you all, once the top 25th percentile starts shrinking down, getting closer to that zero, possibly going negative, what follows? The median price. That's why we knew that the price was going to go down, because that top 25th percentile that's been propping up the market started reverting itself at an accelerated pace starting in the month of June. So we were able to say with a high degree of clarity, hey, watch out. You've been hearing me say this. Hey, watch out. We were noticing a slowdown before the data showed us the slowdown, because we saw that top 25th percentile go down. At one point, it was up by 7% year over year. Now it's only up by 0.1%. The bottom 25th percentile is down by 3.1%. So far we've had 8 cities go up in price using the median out of everything that sold last year versus everything that sold this year. City of Austin is up 0.2%. Bastrop up 4.2%. Burnett 4.8%. Cedar Park doing really well, holding steady, 1% increase. Leander, 0.4% increase. There we go. Love Leander. Where are my Leanderthals? We've got Smithville, 3.9, Spicewood, 5.3, and of course, we've got Wimberley, 15.6% increase in price, the number one city out of all of the cities that we track. So, how many sellers are there per buyers in the market? We're looking at 2.4. 0 cities are hot, 3 are warm, 18 are balanced, 8 are cool, 1 is cold. Dale is cold. What about zip codes? 2 zip codes are still considered hot. We've got 7739 and 7759. Those are 2 hot zip codes. 17 are warm, 39, a vast majority, 52% are balanced, 17 are cool. 0 are cold, which is really encouraging. We don't have a single cold zip code. 17 are cool. We will not update the absorption rate or the market flow score until 5 days before the end of the month. So please keep on joining us, and we will update the market flow score along with the absorption rate at the end of the month so we can capture the most amount of data. Let's take a look at the bond market really quick. We're up 1.4 basis points on the bond market. We should not expect a ton of movement this week within the bond market, but we started a little bit crazy today. We do have some housing data that's going to be released this week, building permits, housing starts, export pricing, pending home sales. We're going to update all of the resources this week related to those. We've got mortgage information, commodity information going into Wednesday. We've got business activity going into Thursday and purchaser manager index going into Friday. So this should not be a consequential week for rates, but we know that rates are being driven primarily due to geopolitical events going on. So it could be a wild ride just because we live in a wild world right now. Oliver said, I have a positive story for my Manor listing. Week 1 open house 0, week 2 1. Yesterday, first Sunday open house, 5 visitors, 3 renters looking to buy, and an agent whose buyers like it enough to call their lender and maybe make an offer. I love it. That's why I'm such a fan of open houses. Question for you, Oliver. What price point is that listing? Really quick question. What price point is that listing? What price point is that?
$379.
$379. Okay, let's take a look at this. I'm going to go to Manor. I'm going to pop this insight in analysis for Manor. 375?
9.
Oh, 379. So you're right at the 65th percentile of Manor. prices within that percentile is up 6.31% year over year within that percentile, which is really positive. So 379 puts us, look at that. So let's look at the activity index. There you have it. That's a decent activity index, over 20%. So you're under that danger zone. You're within that danger zone, right? 25%. Would love for it to be 25%. It's not, but that's fine. But you're over that 20%, which is good. You're at 21.4%. You've got 33 pending, 121. That's a sweet price point that you're in for Manor, which is really good. And let's take a look at a few more things. How big is it, just out of curiosity?
2505.
2505. Wow, you've got 10.2 months of inventory. So, but you're really, 2505. Yeah. Hey, good job. I'm going to take a look at your marketing. You clearly did a really good job on marketing. Let me look at the activity index for that specific range. You've got 2505-ish or so. Yeah, man, good for you. Good for you, because that specific break is only a 15% activity index. So good for you. That's awesome. Way to go. Way to go on marketing. Way to go. That's great.
Credit.
What's
seller
that?
Gets a ton of credit. The seller gets a ton of credit. He is very tidy and very organized.
When did you list
So
it?
he's done a great job. 17 days ago.
17 days ago. Let me show you something that really ought to be encouraging for all of us. And that's going to be the how fresh is the market. Let me go find that resource for all of us. The how fresh is the market. Let me find that right here. How fresh is the market? Manor. 338 active listings, 103 did not exist 30 days ago. That's 30.5% of the entire inventory in Manor did not exist 30 days ago. There are 80 pending. 5 of those pending, the listing did not exist 30 days ago. That's 6.3%. In the median days on the market, 10 days on the market. This right here shows that the exceptional properties are selling. On the listing side, you have to position yourself that way. It has to be exceptional. The exceptional ones are moving. You just have to on the listing side, put your buyer's agent hat on, preview the competition. Take your seller to the competition. And why would a buyer buy this one versus that one? It's the buyers are what? Ready, willing, and able. That's what it takes for a buyer to go ahead and say, okay, this is the property that I want. There are a lot of buyers out there that, they're ready, they're able. It's the willing part. And once they find that product that is pristine, lick the floor ready, they become willing and they don't mind acting on that. But it's got to be perfect, all right? The marketing has to be flawless. The condition has to be flawless. Because look at the median days on the market for the properties that are going under contract quickly. Keep in mind that this pending listed in the past 30 days doesn't mean pending in the past 30 days. This means the property that is currently pending didn't exist 30 days ago. Not the pending didn't exist, the active listing didn't exist. That's why I pull the information that way, because it shows us that the good part of the market is selling quickly. Look at the median days on the market for these properties. Look at the city of Austin. 14.7% of all the pending properties. The listing didn't exist 30 days ago. 161 properties went under contract with a median days on the market of 7, and that listing didn't exist 30 days ago. The good product is moving. You just have to be the good product. And on the buying side, this applies also. When you look at 15 properties and one of them stands out, one of them is like, wow, this is great. It's priced right. It looks great. It feels great. And then you call the listing agent up and the listing agent says, oh yeah, we've got multiple offers. Don't trust the activity index saying, well, wait a second, but that activity index for that range is only, 10%. Well, yeah, but that's the one property out of the 10 that stands out. People want that one property. They're not bluffing. They're not bluffing. The good product sells. The good product moves. Do we have data to prove that? Of course, we've got data to prove that. When you go to Insight and Statistics and you go to the sold price to list price ratio, let's make this a little bit bigger. And we can see sold over list price. Let's go to the sold over list price. So far this month, 9.7% of all closings sold over list price. 9.7%. The lowest in the history of tracked data is 8.95%. That's the lowest one since we've been tracking this data, 8.95%. When was that? That was December of 2023. That had the lowest number of properties as a percentage that sold over list price, which is lower than any month from 2008 to 2012. 2011, October 2011, it was 9.6%. That was the lowest one, October 2011. We beat that lowest one December 2023 at 9%. Right now, we're at 9.7%. 9.7%. That's where we are right now. So we've got the data to show that, which means that take the worst month for real estate ever in 26 years, and 9% of the property sold over list price. In the worst month, it was still 9%. Take the last real estate recession, which didn't affect Austin that much. It was 9.6%. 1 in 10. 1 in 10 still sold over list price. Well, you all, that is all I have. Very important meeting. I've got a question. This was in the weekly update Thursday. Inventory, by contrast, is a leading indicator, and it turned first, not what you always tell. Let me repeat the question. This was a weekly update Thursday. Inventory, by contrast, is leading indicator, and it turned first, not what you always tell us. What do you mean by that? Like, I don't know if you
always
unmuted
tell us
yourself.
that
Oh, go for it.
inventory is a lagging indicator. And in the, the summary on the 13th, I think it's in the section where it says, what's the median price in Austin? It's like in the second paragraph, but it popped out at me. It's like, what?
Well, one of the things that's happening right now, because the number of pending properties are decreasing at an accelerated rate, we have more active properties that are just staying within the market. That's the interesting thing that's happening right now going into the third quarter. Active listings are actually supposed to be down year over year right now, and it's popping up at an accelerated rate because the properties are not going pending. Like, that's what's happening right now. So what's happening within this third quarter is a little bit counterintuitive to what historically and traditionally should be happening. As a matter of fact, if we look at the daily today that I updated, we've got right there, Austin housing supply August is barely moving as a percentage year over year. Okay. And that is exactly why the demand side of the market deserves our full attention. And we've got the number of active listings, and it's only up by 0.5%. But the demand side of the equation, that's the one that's just increasing. Like, the gap is increasing. If we had 200 additional pending properties that would have been absorbed under this normal market cycle, well, we wouldn't be up in active. An active property becomes pending. So now we've got, active listings are going up. And yeah, part of it is the whole lagging indicator, because we've got the new listing to pending ratio that's now under that 0.75. When you look at the new listing to pending ratio analysis that we do, let me go ahead and click on that new listing to pending ratio. It's got this right here. Between 0.6 and 0.7, we start noticing a tangible inventory growth. What's supposed to happen in August, September, October is that even though the ratio is going down, the active listings are also going down because of the seasonality of real estate. Well, right now we've got the ratio going down, but it's going down by such a large amount that the number of active listings are now going up. So it's an interesting thing. Which is why we track this on a daily basis, Is this anything to be concerned about? Bottom line, you can't affect it, right? Don't let this be all consuming. It's one of those things where we have to know this for the benefit of our clients on the listing side, on the buying side. On the buying side, crazy good opportunities, especially on new construction. Love what Oliver said about open houses. There are a ton of buyers out there, right? We're expecting 2,700 properties to close this month across the MSA area. So activity is happening. Be out there and just be a part of the activity. Do the top 100. Stay engaged with your people. Keep on doing that. People are going to open houses. People are seeing the deals out there. On the listing side, tough conversations, especially if you're in certain areas, especially the areas that historically were really good areas, like 78717. Historically, that was a really good area. Well, right now, huge pullback within that area. So it's something that you have to be aware of so that you can educate your clients appropriately. We went way over time, you all. It's 11:22 right now. Let's go ahead and just call it a day. Be sure to join us Wednesday for our broker Q&A, Brokerment review. I've got a bunch of videos that I owe you for Brokerment, especially on the leasing and listing side of things. I'm working on all of that right now as we speak, but be sure to join us Wednesday for broker Q&A, Brokerment review, contract review. And we do have our Friday meetings, so please be sure to join us for the Friday meeting. Otherwise, that is all that I have. Hope you have an excellent, excellent rest of your day. If you have any questions, comments, concerns, criticisms, or complaints, please always feel free to reach out, and I will chat with you all later.